All right, good evening.
Good evening.
Welcome back to Compound Interesting. Today's video, we're having a look at why potentially the stock market is actually way undervalued, or stocks are cheap right now, and all the normal metrics that we use to evaluate the value of the stock market. They're giving us valuations that are higher than normal. For example, let's have a look at the PE ratio of the S&P 500 over the last, I think this is 100 years. The PE ratio is at one of its most highest points in all of history, as well as the PS ratio. PS ratio meaning price to sales ratio. So the price for the entire index of the S&P 500, like all the market cap combined, in comparisons to the amount of money that all those companies make every year. So before I tell you why the stock market is really, really cheap, I'd hugely appreciate if you could smash the thumbs up button. It really helps, especially at the start of a video, and subscribe if you haven't already. And yeah, let's get cracking straight away. So the main reason that the stock market is undervalued, in my opinion, or potentially not as overvalued as it appears, is because of all the money printing. Now I know a lot of you are like, oh duh, but let me just show you how much money printing is actually being done and help open your eyes to what the stock market should actually be valued at. So right here we're looking at the M2 money supply. Maybe first I should explain what the different money supplies are. So M1 money supply is the amount of dollars in the world, so the amount of money in bank accounts, the amount of money under mattresses, etc., etc. So it's actual how much dollars are in circulation. Whereas M2 kind of incorporates money market funds, savings accounts. So it's pretty similar to M1, but it incorporates a few more things. So essentially M2 money supply is how much dollars there are in circulation. Kind of like there's little differences between M1, M2, M3, M4, but I don't want to get too in the weeds of that because I don't really know, to be honest. But here we can see the M2 money supply of the last number of years, and you can see that jump recently because of the Rona and all the printing because of the Rona. But it doesn't seem that too bad in this graph, but when you actually run the numbers, so we can see here that it is 19 trillion now, M2 money stock. And before, in January of this year, before the Rona, it was 15.3 trillion. So that's a ratio of 1.25. So essentially 25% of all US dollars were created in 2020. 25%. Now, if we think about inelastic market theory, so let me explain what inelastic market theory is. Let's say there's 10 houses on a street and all the houses are sold for $100,000. Then someone comes along and really wants to buy one of those houses and is willing to pay $200,000. One of those houses just sold for $200,000, and the market has essentially decided that all the houses on the street combined, instead of being worth 1 million before, now they're worth 2 million, because now they're all worth 200,000, because that's what the market is now willing to pay for all those houses. So even though only $1.1 million has gone into buying of those houses, now those houses are worth 2 million. So that's the same with stocks. Even if the stock market is worth 70 trillion, doesn't mean that $70 trillion has been put into the stock market. I hope you're starting to understand me. So I think you can see where I'm going with this. So 25% of dollars were printed in 2020. If everything being equal, say there was no Rona situation and 25% of dollars were printed in 2020, then everything should rise by 25% in dollar terms, not in value, just in dollar terms. Everything else being equal, because of inelastic market theory, everything spread out is just going to rise by that amount, or it should do, like logically. Just to finish up on inelastic market theory, it's been calculated that for every $1 that goes into the stock market, that turns into $5 of stock market value. And it's even more crazy with Bitcoin and cryptocurrencies. For every $1 that goes into Bitcoin, it increases the price by $20. So just to be aware, it's pretty crazy. That's why Bitcoin is very, very volatile. All right, so obviously because of the Rona, the entire broader stock market is less valuable because they're not going to be able to make as much money. Well, they might be able to make as much money, but they're not going to be able to make as much value money, if you know what I mean. If there had been no Rona in comparison to that. So how much less valuable should the stock, let's say there was no money printing whatsoever, how much less valuable should the broader stock market be if there was no money printing and the same economic things had been happening, all the lockdowns, etc., all the Rona and stuff had been going on? How much less should the value of the stock market be? 10%, 20%, 30%, 40%? I can't really answer that question, so you've got to come up with your own conclusion for that. But we can see, if you're looking at the stock market, let's see the S&P 500 since January. So the S&P 500 has risen 8% since the peak before the big crash to now. So it's risen 8% in monetary terms. But as we discussed, in real value terms, it has essentially dropped, what's that? Quick maths.
Boom! 2 + 2 is 4, -1, that's 3, quick maths.
It's dropped by 17% or thereabouts, if we're assuming that everything should be valued 25% higher because of this inflation. So it's actually dropped 17%. By only rising by 8%, it's actually dropped 17% in real value terms. So that's the way I'm looking at stocks right now a little bit, and I think, okay, 17%, maybe that's actually fair. On top of money printing, there's another huge catalyst for S&P 500 and Dow Jones and index funds and stocks in general to perform better and have higher price multiples during these times. And the reason is because bonds are absolutely useless, and they're getting more and more useless as time goes on. The only people buying bonds right now are governments. The Fed is really the only sane person who's buying bonds at the moment, because if you're buying bonds right now, I don't know whatever country you're living in, you're essentially saying, okay, in real value terms, you're essentially saying, okay, I want to guarantee lose money. If I give you my dollars now, I want to have less money in 1 year, 2 years, 10 years, etc. In real value terms, by buying bonds, that's essentially what you're doing. There's nowhere in the world where you're getting a real return on your investment into bonds. I don't know of anywhere in the world where you're getting that real return, because inflation is much higher than the bond yields. However, if the US government decide to actually go negative, I think that could, even though it doesn't really mean that much, it's just a negative number. Like, people don't realize, but they're actually losing an enormous amount of money to inflation. But once they actually start losing actual monetary numeral money, if you know what I mean. So if you put $1,000 in, you have $999 at the end of a year. I think people will absolutely flee the bond market if/when that happens. And where else are they going to put their money? Like, there's some ridiculous amount of money in bonds. It's like 90 to well over 100 trillion or something in bonds at the moment. So that's trillions and trillions and trillions that is going to leave the bond market. And where are they going to go? Most likely into stocks, real estate, gold, Bitcoin, anywhere but bonds. It's got to go somewhere. Bonds make up way more in monetary value than stocks at the moment, but this won't last forever. There is going to be a flippening. Like, think about it. If rates go negative, who in their right mind is going to hold bonds? Like, you'd be better holding cash under your mattress, literally, if rates went negative. So these are just a couple of quick reasons why the stock market could be potentially undervalued, and with the amount of inflation that's going to come over the next few years, and this inflation isn't going to stop anytime soon. Like, 25% in a year is hyperinflation territory, but granted, it probably won't be 25% next year, but it's not going to drop to like 0 or 2% or 1% inflation. It's going to be a large amount of money printing for the next few years. We can see that the new Treasury Secretary, the likely one, is Janet Yellen, and she's a big money printer proponent. So the money printing is only set to continue for the next few years. Bonds, even Ray Dalio is saying, sell your cash, sell your bonds. So the money has to go somewhere. So stocks is kind of the only option for stocks, and index funds are kind of one of the only options for people in their 50s, 60s, 70s. But for me and you, we can buy our growth stocks, we can buy our cryptocurrencies and make absolutely crazy monetary returns. All right, so that was just a quick video to open your eyes to the power of inflation and how it's going to affect your portfolio. So your portfolio might look like it's going so well, everything's going up crazy, but in real value terms, it might not be going up as much as you think. So I think I'm a genius in the stock market, but I'm doing extraordinarily well, but probably am actually doing that well in real monetary terms once this inflation actually catches up when I go to buy my Ferrari or whatever in the future. You guys know I'm going to be buying a Roadster, not a Ferrari, but maybe I'll get both. But I just want you to be aware of that cash and bonds are really not a great place to put your money at the moment. I think most people are aware of that, but if you're a noob, definitely if you have a lot of cash or a lot of bonds, you need to really look at putting that to work somewhere where it's not going to get inflated away to nothing. Alright, so I hope you enjoyed this video. Just a quick one to kind of open your eyes to inflation. Obviously, I'm a huge proponent of Bitcoin. It's my biggest position. That's all I've really been buying for the last month or two. Some other cryptocurrencies as well. But anyway, if you did like the video, I hugely appreciate it if you could smash the thumbs up button. Make sure you've hit that notification bell if you haven't already, because I'm a small channel, it doesn't really appear in the recommended. So if you hit that notification, you'll always be notified when I release a new video. I'll be releasing new videos very, very soon, and I cannot wait to see you in them. So thank you so much for watching. I hope you learned something, and I hope you enjoyed it. See you in the next one. Cheers.